So let's talk Tesla, because this is a stock that has become a little bit more liquid in terms of the actual cash stock trading as well as the options trade as well. What are you seeing from Tesla? What are you expecting as a trader?
You know, it's interesting. I'm surprised we haven't seen the implied volatility start to rally in these options yet. When a guy like Elon Musk, who is so integrated with Tesla Motors, really knows the ins and outs of the company, comes out and says, hey, I'm making a big announcement next Tuesday. I would expect all kinds of paper flow to start rushing into this, and we're really not seeing anything yet. The implied volatility has not started to react to Elon's announcement next Tuesday.
Even though, Mark, trading volumes did spike yesterday around his first tweet saying that he was going to make this very big announcement, we saw basically all the options trade twice the daily volume over the past month or so. So even though implied volatility, that key gauge of options prices, is not moving up, we are seeing a bit of a flurry of activity, right?
Absolutely. We're starting to see people step in, and I actually think there's some really great areas where we can kind of play ahead of this. You know, I'm relatively certain that this stock is going to rally into that announcement. Elon Musk is doing some wonderful dog and pony ringmaster work right now, where he's really being a showman and really building up this announcement. There's going to be people buying the stock, speculating that what he's going to say is big. I think we have to play options ahead of that announcement and assume that you're going to see option traders come in and start to buy call options ahead of that announcement, driving up implied volatility.
So you're talking about call options, you're talking about a bullish trade, at least medium-wise. So how do you play it with the options? Would you just buy calls?
No, you know, I want to hedge my bets here. One of the cool things is the way the option structure is set up right now. The cheapest options on the board are right at that 40 strike. And actually, interestingly, options in a relative terms, relative to implied volatility, start to get more expensive above the 40 strike. So what I want to do is buy the cheapest option on the board and sell something relatively more expensive against it. So the trade I'm looking at is the May 45 call spread, paying about 85 cents. That's pretty cheap. Pays out more than 4 to 1 if it went to 45. But I think more realistically, Tesla rallies ahead of that, creeps up to $40 a share. We could potentially sell that call spread at a 50 to 100% return without ever having to hear a single thing that Elon has to say.